Good morning, everybody, and welcome to our second session of the morning, which is about business management and monitoring. My name's Alex Peel. I'm Joint Managing Partner at James Cooper Preston, and for this session I'm joined by Fiona Hawkins, who is also a partner and head of outsourcing at the firm, and by John Taylor, who's a manager in our outsourcing team. I think we spoke earlier in the introductory session about the different stages of the business life cycle, and I think I mentioned particularly the fourth stage, where businesses potentially can decline, and making sure that businesses have the awareness to know if that situation starts occurring. But I think it's very true that whilst it's important at that stage, knowing how you're doing and having the relevant data to measure performance is really, really important at all stages of the business life cycle. I think the first stage is probably often seen as the most dangerous stage, and the stage where businesses fail most often. So also at that stage, you're going to need to know how you're doing, even if you're more focused on things like cash at that stage. So perhaps during this session, we might be able to explore some of this more, and how businesses might go about monitoring and measuring their performance and looking at how they are doing. So I think, as you will have known from the previous session, if you do have any questions, please do type those in and do ask those questions. They will come up on our screens, and we will obviously try and get around to those if we can and try and answer those. But Fiona, perhaps to start off with, perhaps you could tell us a bit more about what we mean when we're talking about monitoring and why it's so important.
Yeah, sure. Thanks, Alex. I mean, it's basically, as you said, if we're talking about monitoring here, we're talking about using data to give us information for management, for decision making. And it's data that, with the advent of cloud technology, has become much more immediate and more accessible to businesses than perhaps it may have been in the past. So we're looking into, and we're looking behind the numbers, whether that be cash, as you mentioned, whether it be turnover, whether it be profit, tax liability, combinations of these things. Excuse me. We're looking at the position of the business at a point in time against forecasts, looking at trends. And where we can get data. We're looking at benchmarking against industry or sector comparatives, which can be very helpful as well. So we're talking about having a plan, a strategy and a budget, monitoring performance against the detail of that plan. So it's about understanding the financial and also integrating some non-financial aspects of the business, using this understanding to kind of build business insight, business intelligence. Which then helps support strategic decision making and also operational decision making, because it means it's then based on known circumstances and based on accurate data. But I think that's just a really, really brief thing. I think John might have a couple of comments as well about sort of what we're talking about here and why it's important.
Thanks, Fiona. Yeah, as Fiona mentioned on the monitoring of the numbers, looking behind the numbers, and enabling actual business decisions to be made based on what the numbers are showing. So it's all about having that data available to you, having it live, up to date, so that you can make quick decisions, which obviously in the past year has been clearly reflected. We've all had to make very quick decisions, but thrust into lockdowns and having to work from home and things like that. Those sort of things, having the data behind that, whether you need to put people into furlough and things like that. But the businesses that have done well have had that data up and running. So to get into that position is really crucial, because you can look at what you've got and monitor things regularly to actually enact on that what you need to do at speed, and be accurate and confident with your decisions that you're going to make to help maximise your potential.
Okay, thank you, John. And Fiona, perhaps you can tell us a bit more about the details that should be monitored and what you should be monitoring.
Yeah, sure. I mean, I think I'm going to say it depends. And it does. Some things there are some things so that every business, whatever stage they're at, whatever type of business it is, that that should be monitoring. And you've already talked about it, and we'll talk about it a bit more in a moment. But every business, almost every business, needs to monitor its cash position. Most businesses that fail do so because of a cash problem rather than anything else, at whatever stage they're at. So, but other ones will be much more specific to the business, perhaps, or specific to the objectives and aspirations of the business owners, to the sector, and this is something that you've already just mentioned, Alex, but to the stage of development of the business. So what you might need to be monitoring very closely for a startup business may not be the same as what you're monitoring when you're in the growth phase, or perhaps the business is consolidating, or you're wanting to take a new direction, and therefore you're you forecast a new enterprise. Perhaps done some scenario planning for it, and you need to be monitoring how you're going against that. Or if you're preparing a business for sale, likewise, but you'll be looking at different things. So I think we've already mentioned that it's about having a plan and monitoring against that plan. So basically, I think always have a plan and measure and monitor against that, and keep it live, keep it up to date, keep it accurate. Don't create a monitoring plan and then not look at it until after the next financial year. And as John said, if you're making decisions based on data that's old, then you're making decisions based on the wrong data, basically. So it needs to be up to date. So don't create something and then not look at it until after you've run into problems. But I think, John, what number one business thing that you should be monitoring?
Absolutely, yeah. I always say that cash is king. So for any business, from startup to growing businesses, small medium businesses, cash is always king. You can make sales and you can grow, which is great, but you've got to monitor your debtor days and how quickly your customers are paying you, because with making those sales, without the cash coming in, it affects your relationship with your suppliers, which can be crucial in terms of timing of getting your sales out, and also paying your staff, obviously, who are very important. Again, it's very crucial that there's a direct impact to the cash not coming in, because obviously there's other liabilities, your tax liabilities and things like that you always have to pay. So being on top of that as a business owner and monitoring that is very crucial. And it also it allows you to plan forward, to be able to look at when your business is growing further down the line, what are your cash requirements going to be? So whether you need a loan to help with your growth into whatever it is, whatever your goals are, whatever you're planning to do, as Fiona mentioned, stick to the plan, create a plan, and that will enable you to look forward. But it's crucial to monitor that at all stages.
Thank you. Thanks, John. And so Fiona, to you again, perhaps then. So who should be doing the looking? Who should be doing the monitoring? And I think we sort of sometimes think that you should be doing it at different stages, but how often should businesses be monitoring the various numbers, the various things that they could be looking at, and perhaps what might be appropriate for different types of businesses?
Yeah, sure. So I mean, obviously, I'm going to say the business owners. It's personal to them, and clearly they're going to be the ones who first off want to be monitoring. But I think and the decision makers as well. But it's an area where you can get huge benefit from having an outside view as well, having somebody who's got that ability to take the step back. But crucially, they need to understand your business, understand what your aspirations are, what your objectives are, what your plan is, what your goals are. But that isn't so deeply into the detail and so sort of embedded in the business that they can't help you make the kind of objective decisions that do need to be made. So that's where some third-party insight is really valuable, and it's where people like us, we can sit down with you, we can create insightful analytics, we can create reports, we can set up dashboards that can be monitored. We can sit down and talk things through with you to help you identify, what's important to the business, what's important to the owners, what's important now, what might be important in the future. So yes, in terms of who should be looking at it, I would say, as definitely the business owners, but really it's an area where some external advice can be really beneficial. I think in terms of how often, I mean, John's already mentioned and about how important it is to keep on top of things, and there's lots and lots of tools that can help you do that as well. So I'll let John talk about that a bit.
Yeah, so if we look at how often, if we look historically, a lot of accounting and bookkeeping and things like that has been dictated by compliance and the need to, whether it's a quarterly VAT return or an annual financial statements that needs to be submitted, and people have used that as their deadlines to make sure their accounts are up to date or whatever. When you're looking at growing a business or just general good practice, if you can get your bookkeeping up to date and live, which there's cloud software out there available which enables you to do this now, to look at live data, it really helps. And to be honest, you can look at it quarterly still, but you're better off at least looking at your data monthly, even better weekly. But there's a point with the advent of the cloud accounting and all the apps and the app stacks and all these software and technologies that's available, you can look at your bookkeeping daily and keep on top of exactly where you are. I mean, an analogy I often use is your internet banking. You can log in and you'd see daily your transactions that are pending going out. It should be exactly the same with your accounting software. You wouldn't expect to log into your internet banking quarterly and see your bank balance or everything you've spent or money coming in. You really need to know that daily to be able to monitor your business properly. And cloud accounting can definitely do that. You can set up live bank feeds that link into accounting software such as Xero, so that you have that data flow constant and you can keep it up to date, keep your bank reconciliations up to date, which helps with your cash position.
Yeah, I think the other thing is really, and again, it links to the technology point, but you can use technology to set up things like alerts. So you don't have to be in your data all of the time in order to still be on top of it. So you use the technology to monitor it in the background. You set up an alert perhaps to say that you're getting close to an overdraft limit, for example, or something a little bit more sophisticated. You could set up alerts that will tell you when regular customers perhaps are beginning to buy less or buy less frequently. And with that early warning that you might not otherwise have noticed, you might be able to do something about it before it's too late. And of course, the other thing is, I suppose, you can set up alerts as well to tell you good things too. So to say that you've reached your monthly sales target or something like that. So some good news that will help you sort of affirm that your plan is on track and that your business is doing what you want it to be doing. So yes, I mean, totally, I agree with John. You need it to be up to date, but also use technology to help you, so you're not spending all of your time monitoring things when actually you want to be spending more of your time running your business and not being in your data. So yeah.
Okay, thank you. So, I mean, we've talked so far about some of the things that businesses should monitor, but how, in your experience, does an individual business decide the sort of exactly what to look at? I've seen businesses with sort of several pages sometimes of KPIs, and actually they become not useful because there are so many of them. It's really hard to pick out the right ones and really focus on what's important. And I guess that the key word is key performance indicator. So having several pages probably means that they're not key to your businesses. But how do businesses decide what to look at and what to choose from? Fiona, perhaps we can come to that one.
I was going to make it, yeah, I'll reiterate exactly that point, Alex. I mean, we've got an analysis and reporting tool which, when you log on to it, it gives you as a starting point over 50 potential KPIs. And then you can add further ones to that. So you can add bespoke ones, you can add ones that integrate non-financial data into your monitoring and reporting. But clearly, if you've got 50 or more KPIs, it's going to be serious information overload. And just because the technology means that you can do it doesn't mean to say that that's a good thing that you should be doing. If you've got all that data, as you said, then you're not going to use it. It's not going to be helpful to you. And if you're not going to use them, then they're not helpful. So, and this is where sitting down and understanding what the business is wanting to do, what you're wanting to do with the business, what the current position is, where there are problems, potential problems, where there's gaps. That's what's the key starting position. And as I said before, it really does depend on all of those factors. So the KPIs, although you will have similarities amongst different sort of stages of business, we'll be looking at similar KPIs. You'll have similarities about ones in the same industry. We'll tend to look at the sort of the same type of KPIs. Each business will have its own specific set of circumstances. But typically for a trading business, you're going to want to look at some profitability measures. So, for example, total revenue, gross profit margin, perhaps profitability ratios. As John has already talked about, every business is going to want to monitor cash. And again, technology can help you here because to the extent on a really granular basis, you can monitor cash flow down to tracking and scheduling individual payments, individual invoices, if that's what you need to do at your stage of the business. But there are other cash measures that you might want to look at as you're developing your business and developing your strategy. So you might want to look at the sort of net variable cash flow, where you're looking at how much additional cash will be generated by your next £1 of sales, and you can track that over time and whatever your target's going to be for that. So if the business is in a growth phase or expected to grow, then obviously you're going to want to be measuring and monitoring some aspects of that growth, whether it be change in revenue, whether it be change in operating profit. This is an area where often it's useful to incorporate some non-financial measures as well. So perhaps increase in number of customers or increase in spend per customer, something like that. And again, the technology allows you to do this, helps you to do this, so without spending hours and hours about it. So, I mean, and just briefly, I suppose other measures that we might typically consider and talk about, and whether they're going to be helpful to the business and whether they're going to help in a decision-making capacity, would be measures around sort of liquidity, the current ratios, cash ratios, activity measures, which is the type of thing John has already talked about, some of those sort of your accounts receivable days and how that's moving over time. And, you know, is it gradually, incrementally getting longer, and you're not really noticing that it is because you haven't seen it, and it was 30 days and now it's 35, and that may not seem a big number, a big difference, but it could make a significant difference to the cash at certain pinch points in the cycle of the business. And then there's also sort of the efficiency measures, which typically often people will hear about. Return on capital employed will be one that often is sort of considered, which is a efficiency and measure of the profitability of the capital being invested in the business. But as you can see, even in that brief summary, I probably mentioned 10 performance measures. And as Alex said, really it is about identifying what the key ones are, and you need to prioritize them, identify ones which really are important to you, and focus on those, and sort of not get dragged into the temptation of looking at your 3 pages of KPIs just because it looks nice. But yeah, so just emphasizes, I think, again, how important it is to first of all to understand in terms of monitoring what you want to achieve, and therefore why you are monitoring it. But yeah, I think that probably answers the question, but it still says it depends.
No, absolutely, and I think it's really important to sort of have a proper think about it, and obviously we'd be delighted to discuss that with clients, and sort of from our point of view, sort of help clients understand what is really important and what are those things which they should be focusing on and monitoring. So as we've sort of heard, there are lots of things that you can do with the data once you've got the data. But obviously people are sometimes a bit time pressed. So John, perhaps I can come to you for this one though. How do you get the data in the first place without it taking ages, taking loads and loads of time? And how do you get it sort of up to date so that it's not out of date and not useful?
Okay, so the importance of reducing getting from compliance focused and moving away from quarterly or down to monthly, down to weekly or daily bookkeeping. It sounds really daunting, but the reality is there's automation, there's technologies that we can use now that help this process. The crucial part of it is getting the setup right. So you need to look at your systems and controls and how you want to set this up, and using what we refer to as an app stack really helps with this. So from the start point, it may be that you're a business that raises purchase orders. There's a great software that you can use called Approval Max. So if you set that up, you can set it up so that you're raising a purchase orders. It goes through a particular approval process, which is it's all automated. It sends. You can do it on your phone, and you can approve it on the move when we're allowed to get back on the move. Things like that. This will then be the starting point. You then have invoices coming in from your suppliers, and you'll be raising sales invoices to your customers. This again can be automated. So there's invoice extraction data tools that you can use, such as Receipt Bank and auto entry. So it's a case of, again, getting the setup right, and you can get your suppliers to forward to an inbox to pick up these invoices, extract the data, which is then pushing data through to cloud accounting software such as Xero or QuickBooks. This then, uploads the invoice. It's all coded. You can see here where the wheels are in motion, and it's a lot of automation. There's not too many touch points where you as a person have to get in. This, again, you then in your accounting software have a bank feed set up. So this is where you're from your internet banking, or sorry, open banking now as it is, it's pulling through live transactional data for you, money you're spending and money coming in, which can then match to these transactions that have been created by auto entry or Receipt Bank, the invoices and the sales invoices that you've raised, so that you're reconciling your bank. All you have to do is on your phone or your tablet, or however you choose to do it, it will match things automatically. You just have to go in and check it's okay, press OK, and then it's dealt with. That's your sort of daily bookkeeping that you're up to date with. On the back of that, you then have your monthly processes where you complete your accounts, and then you'll start looking at what Fiona was talking about, your KPIs. And this is where the data that you've created from all these technologies and the bookkeeping pushes it through to reporting add-ons. And you've set up, you've had the conversation where you discussed the key performance indicators that you have, and the software will help you to present this, and that's really the key to it. It sounds a lot, but you get the data presented in a form that you can understand, and that you can then monitor your business, and that really help you to make accurate and be confident with the decisions that you're going to make.
Super, thanks, John. And just finally, perhaps, what's the best piece of advice you can give around the topics that we've been talking about? John, do you want to take that one as well?
Sure, yeah, so I have touched on it quite a lot, but being up to date and getting to the point where you are, well, bookkeeping is essentially done automatically is really crucial. It can unlock so many doors, and it's just looking at live data. And it also enables you, if you use outsourcing, for example, you can have those conversations, and you can both be looking at the same data. And if there's something you don't quite understand, you can pick up the phone, you can have a conversation, and you're looking at real-time data that can help with your decisions now and also in the future, which helps with planning and forecasting, which is also crucial.
Super, thanks very much to both of you. We do have a couple of questions that have come in, and if you do have a question or some questions, then there is a bit of time, so please do enter those into the system, and we'll try and answer them. The first one's just around sort of the more generic software, I think. So I think one of you mentioned Xero earlier, and I think Xero is certainly a package that we see a lot of use of these days, and it's a well-known cloud accounting package. But other than Xero, what are the main packages that you're seeing, and what other packages could businesses consider if they want to look at one or two before they make their choice? I don't know who wants to take that first, but
John, are you happy to kick that one off?
Yeah, I can pick that up. So in terms of cloud-based softwares, the main ones that we're seeing for the small businesses are Xero and QuickBooks Online. They're particularly, they're sort of ahead in the marketplace, and they've got all the automation. Particularly with Xero, they have hundreds of add-on products, which really helps because although the software itself is basic accounting software, once you have these add-ons, you can add industry-specific add-ons, so you can create a more bespoke package than just a simple accounting software. The same with QuickBooks Online. I mean, they both have the automated bank feeds and all the things that will enable you to create an app stack and to have automate your business processes fully. Sage also have cloud accounting software, and there are a lot more available. So I mean, it's the sort of thing that you've got to get the right thing for your business, for the stage of the business that you're at. So it's a case of what investment you want to make in terms of the cloud accounting software, and that's something we'd have to scope individually on a individual basis based on the business needs.
Okay, thank you very much. And sort of just following on from that, really, and I think it might be linked to some of the reporting that you've been talking about. A question's come in: do you use specific management information reporting software, or is that either our own, or is it something that's available in the marketplace? And if it's in the marketplace, what would we recommend?
Yes, we do. I mean, to some extent, you can do basic, simple reporting, and our starting point is that we use Xero for management reporting, so sort of for numerical reporting. But apart from that, there's a number of packages, sort of, and they are available in the marketplace. They're available to small businesses as well as to accountants, basically. And I think the two that we use. And as I say, there are others, but we use, and they both begin with F, too confusingly, but we use Futurely and also Fathom, and they do similar things. They do slightly you look at any of these packages and they don't do quite the same thing, but overall they do similar things. To some extent, it's your choice is down to sort of how you like things visualized. Because they look a bit different, even though they're building on the same data. But what they do is they'll take live data from your accounting package and sync with that and pull it straight through, and so you've got the reports can be up to date. You can also use downloads from non-cloud accounting packages as well, but obviously you need to update that manually yourself each time. But the reporting packages are quite powerful and to allow you to do that. But yes, so we use both of those, and I say they are available in the marketplace to small business owners as well. And I think, as you said, Alex, we're very happy to sit down and talk with people, and likewise very happy to show them, they are only tools. I think that has to be emphasised. The reporting package is not the be all and end all of it. It's the value you get out of it that's actually the important point. But they are tools to help you visualize how your business is doing, and that sort of thing, and to help sort of bring the data to life, so it's not just a string of numbers. So very, very happy to sit down with people and talk those type of things through.
Okay, thank you. And another question, again, coming back to the packages, really. You mentioned Xero, QuickBooks Online, packages like that, and I think, just sort of paraphrasing, often they're seen as packages for small businesses, but also I think a number of larger businesses use them as well. Is there a sort of size limit for packages like Xero, or are they really just for quite small companies, or can they be used for bigger ones as well?
Yeah, I mean, we had this with a couple of clients where we've looked into it, and I mean, and they are very much sort of marketed for small businesses, but they're small to sort of medium sized. There are I've spoken to Xero about it, and they do have some sort of transaction limits, monthly transaction limits, and their response is that if you go over those, and it's about 20,000 transactions a month or something, if you go over that, it's not going to all fall over, but it is going to go slower, basically. But as John said, I think one thing, a lot of the add-ons could be used to sort of expand the capability of these core cloud accounting packages, and that's where I think it is one direction that the marketplace is moving at the moment, in that there is a bit of a gap at the moment for medium-sized businesses if they want to move on to cloud, because there might be limitations for the very basic ones. But as I said, firstly, you can look at add-ons, and secondly, there is a developing market in terms of a couple of products coming into the market at the moment that we're looking at that are for bigger and more complex businesses. But certainly Xero can happily handle businesses with turnover of several million. It's more about numbers of transactions. So if you have lots and lots and lots of very small transactions, you're probably best to funnel those through a specific add-on, and then bring that data into Xero. But as John said, it's about understanding what the requirements are, and then sort of specking out what the appropriate app stack is.
Okay, and I think we've got time for one more question. You sort of almost led into it there, Fiona, with the words app stack. I think John mentioned earlier as well that there are hundreds of apps out there and hundreds of different add-ons that you can use, both to input and then to take data out at the other end. What are your favourite ones? What would you see as the best ones that businesses should focus on, given the huge amount of choice that there is there for people? John, do you want to go first?
John, go first. Yeah.
So the ones that I regularly use, and I really like, I touched on it earlier, but Approval Max I think is a great product. It's really good for the purchase order, and for systems and controls are in place to make sure that, particularly as a business owner, that purchases aren't being made that are unauthorized. And also the back end of that is when the invoice comes in, you can then match the invoice to a purchase order. And if a supplier is invoicing over the purchase order, you can get alerted to that and things like that. So that's certainly, at the moment, that's definitely one of my favourites.
Yeah, and I would reiterate that. I mean, when you consider that so many people are working at home at the moment, to be able to make sure you've still got that level of authorization control, without having to scan loads of invoices and email them to each other and write on them and that sort of thing. That I think is a very, very good one. And I suppose apart from that, it does, the basic ones, the invoice recognition ones, I think they're a no-brainer. Definitely go for something like that. They can save so much time. We've got one. It's not so much for us that we use, which I really like, which kind of like it's an accuracy checking one. So it's not going to tell you necessarily that you've coded something in the wrong place, but it'll tell you that you've coded something differently to how you did it last time, and kind of flag that, say, is that what you meant? Or you may have put a different VAT coding to it, and that may be right or it may be wrong, but it's not going to tell you whether it's right or wrong, but it's going to tell you that it's different from what you did last time, and so give you that ability to go, oh, okay, that's probably a miskeying, I probably didn't mean to do that. So that's a really useful one as well.
Okay, so thank you, Fiona, and thank you, John. I think we are out of time. So obviously, if you do have further questions or comments or want to talk about any of the matters further, then do get in touch with us. Do get in touch with Fiona or John or anyone at James Cooper Creston. Thanks for listening to this session. Our next session starts at 10:45, and that will be on business expansion. Thank you.